Hello everyone, welcome to Insurance Business TV for a mid-market insurance special. In this edition, we look at mid-market brokers and the tools they need to succeed with their clients. We will cover 5 main topic areas: specialization, client relationships, product access, compliance, and technology. And of course, to guide us along the way, we have an expert panel that I am delighted to welcome now. We have Michael Yabantu. He is Managing Director of Mid-Market at Aviva. Graham State, Director of Mid-Market at Allianz. And Lynn Norledge, Networks Commercial Director for WTW Networks. So welcome everyone, and let's start by getting an overview of the market right now. What would you say are the influencing factors? Lynn, I'll start with you.
I think the major influencing factor in the mid-market at the moment is the softening of rates from insurers. We've seen it gather a pace from the global end, where rates have been dropping quite sharply, and now it's starting to impact the mid-market. So I think brokers need to be aware of what's going on in the market and work accordingly, to the benefit of their clients, and also to work with their clients to understand what value that insurance brings to their business, and what else can be done in the market in a soft market. This is often a good time to look at higher limits, new covers, cyber anybody, where clients' budgets can be a bit stretched. Then potentially there is room in a soft market to expand what cover they're buying.
Okay, so that's softening space, very much the centre of Lynn's attention. Is that something that you agree with, Graham?
Yeah, absolutely. We're seeing increased competition really driving down prices across the mid-market, and we're seeing that across different segments across the UK. That's obviously positive for customers, and as Lynn mentioned, an opportunity for brokers to revisit covers and limits and see if customers are receptive to reinvesting some of those savings into areas where previously they might not have been able to afford them. We're seeing growth overall, but only modestly across the market. We've recently released a report that says the UK market grew 3.2% last year, which is some way down on previous years, and that reflects the tapering off of some of the influencing factors which drove that growth in prior years, so the war in Ukraine and the disruption to supply chain. But looking ahead, we also see the increased risk of challenges with trade tariffs and economic disruption, potentially creating further challenges ahead.
That's a great point, isn't it, Michael? Those factors, they are very varied, but they've changed a little bit, haven't they?
Yeah, I think the macro environment definitely continues to present some challenges, I think, and influence the market, whether that's ongoing inflation and supply chain disruption, which is still very real, the increasing costs for businesses, particularly having to absorb the increase in, wages and national insurance. We still see recruitment as a big challenge. In our recent broker barometer survey, we know 74% of insurance brokers are still recruiting, so still a particularly challenging factor. And the continuation of emerging risks that are probably now starting to establish themselves as here to stay. So things like sustainability, cyber, employee well-being being right at the top of that list. And I think for us, it's really important. We recognize those challenges. We understand what's relevant to each and every customer and respond with, I guess, good solutions, guidance, and support wherever we can.
Of course, as those challenges become more varied, so perhaps creates the need for more specialization and risk appetite as well. So would you say that specialization creates better knowledge, allows you to better serve clients overall, or I suppose others might argue that it limits business opportunities? So I guess I'll ask the panel, where do you stand, and how many specialisms should a broker theoretically have? And indeed, are there any specializations that work particularly well together? Graham, any thoughts?
Yeah, it's a good question. I think you can take a customer view and recognize that mid-market is a pretty broad church itself. So it represents customers with turnover of tens of millions right up into the hundreds of millions, with really diverse set of assets operating across a really broad range of industries. So it's not really going to be possible to cater for each and every specific need, but equally you can see an increasingly complex and interconnected commercial risk landscape and the impact that technology is having, and recognize that increased specialization can provide additional value. So, we work with brokers who operate across a number of different specializations, certainly on the production side. And we ourselves have responded by providing specific propositions which provide bespoke covers and limits to products to cater for particular needs. And increasingly, we're looking and finding people shifting towards industry verticals, whereas rather than just looking at industries for a particular traditional lens, now looking at particular niches and subsections and looking at ways of better catering for those particular needs.
Yeah, and that's vital as well, isn't it, Michael? And if you are going to have a specialization, you have to understand your clients and the challenges that they're facing.
Yeah, and I think that's, but Paul, that's probably the real key and crucial bit, whether it's through specialisms or generalists. I think understanding the client needs and the challenges they're facing as a business, and the risk that we either need to work together to manage or mitigate is really critical. So you do need the knowledge, that's the expertise in decision makers. So whether that's, I guess, a business model that's built around specialisms, or whether that's individuals or teams, with experts you can call on. For us, and I often think about this in our business, particularly as we're serving, a massive number of customers across the UK. It's a bit like the kind of GP and consultant analogy. We want, the best generalists in the business with the ability to kind of service, manage, and respond to, as many needs as possible, but with the opportunity to dial in the kind of specialist consultants when we need, whether that's across underwriting, claims, or risk management. So, we operate generally across seven industry verticals. We have developed a couple of additional specialisms as well. And I think, a good example of where that works well together is property owners and developers with things like construction and engineering, because we're seeing, a lot of owner controlled programs and developments in that space. So yeah, I think expertise and understanding client needs is the key.
Okay, well, that is the insurer perspective, of course. But Lynn, where do you stand on specialization from the broker perspective?
Well, I actually agree very much with what Michael was saying there. So I think actually having a specialism for a broker is a very key skill, because it enables that really deep understanding of the industry and delivering extra value to the client. Understanding what their specific needs are for that particular industry, what particular covers they might require. And also a broker who's specialised will have a deep knowledge of which insurers are performing well in that marketplace, which wordings are most applicable to their clients' needs. And in WTW, in the wider WTW, the business is very much organised on a vertical basis with industry specialisms, which our network members actually can access if they need that intellectual property. So I think from a point of view of a mid-market broker, specialisation can be a very good thing. However, I would say if a broker is going to specialise in one or two specialisms exclusively, then that will narrow down their marketplace. It's a very, very wide definition, mid-market, as I think Graham said. So I think having a couple of good specialisms where you are acknowledged as an expert, where you can get very deeply into that marketplace and understand your client, I think it probably needs to sit alongside potentially a more generalist attitude towards the market as well. So, have your specialisms, or if you feel that there's a big enough marketplace in that specialism, go for it, become the broker in that area. But I think most general brokers will look at, one or two specialisms and then be more general on the outside. But it certainly promotes a much deeper understanding of the client, which is what we're all here for.
And I would say that the theme across the three of you perhaps was this idea of adding client value. And if we can go a little bit further with that on the subject of client relationships, how can brokers enhance those relations? So, for example, how often should they check in with their clients? Are there any particular pain points that they should be looking to address? Or is it simply a case of remembering that every client is different, Michael?
Yeah, look, I think, Paul, the interaction has got to be relevant. I think it's got to be relevant to the relationship, the complexity of the program, and and ultimately the cost to serve each and every client, which will be different. And I think for brokers and insurers, we all need to work as efficiently as we can and focus on how we transact and how we interact with each other, whether that's the client with the broker with the insurer, sorry, and in some cases the client, the broker, an insurer in that tripartite relationship. And look, I think the brokers can lean on insurers, certainly on our data and insight, to help with some of those touch points and the regularity and understanding from a client perspective. From our point of view, particularly for larger mid-market clients with more complex programs, then we do have a larger CRM team. So they are really there to help build deep relationships with clients and brokers, working collectively to kind of project manage the insurance program across underwriting, claims, risk management, or into the wider Aviva as well. So I think, look, there's multiple ways, I think, to enhance the relationship with clients.
Yeah, that's such a good point by Michael, isn't it, Lynn, in terms of those touch points that are needed, because this is, of course, such a very competitive space. And if you're not giving the client what they want, they can go elsewhere.
Absolutely, you're correct. It is a very, very competitive place for these kind of clients. And I think as a broker, you definitely need to be looking for multiple touch points throughout the year. Just contacting the client midterm and at renewal really won't cut the mustard. So, you need to be looking at opportunities to talk to the client about the way their business is developing, what their future plans are. Does the program need to be changed to accommodate what the business is doing now? Have there been any claims that the client will need help on? Regular review of claims and risk management. So looking at how the risk can be best managed to maximize the impact of that client when it goes to market and to minimize the costs of insurance going forward. So it's a 12-month cycle where you need to be having regular contact and to become that trusted advisor to your client, so that the client feels comfortable with you, the client knows that you deeply understand your business and that you'll represent him in the best way possible in the market.
Great advice here so far. But Graham, would you say that there are any rules that should be followed, or is it not as simple as that?
No, I'm not sure there are any hard and fast rules. As I mentioned before, I think this is based on value ultimately. So the onboarding process is really key. And this tripartite relationship relies on really good communication between all parties. So at the outset, agreeing what good looks like is really important. I think moving beyond the transactional relationship is really key, as Lynn mentioned as well, and leveraging the data and insight that insurers can provide to clients as well to help add value to the business is really important.
And let's move on to the subject of product access if we can. It's obviously vital as well, but of course, so is competitive pricing, particularly as budgets in the mid-market may be limited. So how can brokers strike the right balance, Lynn?
I think the balance needs to be struck between efficiency and getting the cheapest quote out there, and the relationship with the insurer that will enable the broker to get the best for that client, the best cover, the best value. It's clear that a lot of insurers are very understandably looking for efficiency, and the entry point for digital trading has been increasing in recent years. But I think in the mid-market, it's really important for a broker to have a handle on who is underwriting that risk, how are they underwriting it, and how is that value being delivered back to the client, both in terms of price and in program design.
Yeah, that's, I guess, the main point, isn't it, Graham? There's the balance to be struck here.
Absolutely, that word is value again. So customers need to trust that they're getting value. So they need to be able to trust that the price reflects value in terms of the service and the product they're going to receive. Absolutely critical. So I think it's really important from the outset about discussing, what their expectations are, what good looks like, their ability to withstand disruption, how important and effective and efficient claim service is. These are really important considerations to have at the start to help ensure that the customer is confident in the price being offered and ultimately can make informed choices.
Those informed choices maybe sometimes can be a little bit blinded by price. Michael, would you say that price does have to be competitive?
Yeah, I agree. I agree with both the points. Relationship builds trust and trust builds stability, which is, I think, really important in a marketplace that's evolving and changing. And, we talk about the price has got to be competitive, but it's ultimately about value for money. And that value for money is driven by, a tailored and relevant proposition, understanding where you can add more value. So whether that's addressing things like underinsurance or working with insurers and risk management partners that collectively we can bring in to address some of those needs, or the claims analysis that we can bring to try and help mitigate future claims and keep the price relevant and competitive. So yeah, I think price is important, but it's about, tailored and relevant propositions and value for money.
Well, another value add from brokers is compliance knowledge. Are there any particular pieces of regulation or legislation that you think that brokers need to be on top of, Graham?
Well, they're not short of options, but I think that a particularly topical one at the moment would be the FCA's published consultation paper on the CP 2512. So this is outlining proposals for simplifying insurance regulation, and this forms part of the FCA's wider strategy for 2025 to 2030 of supporting growth across the UK economy. And it's looking at things like the definition of commercial contracts, reducing duplication in co-manufacturing arrangements, and the frequency of product reviews. So a real opportunity, and something I know that Aviva have been actively involved in promoting as well. So real opportunity for brokers to influence the agenda from a regulatory point of view, and much welcome, I'm sure.
Okay, so there's a real opportunity there, Michael. But just to go back to Graham's original point, they're not short of options. There's a lot to keep on top of, isn't there?
No, absolutely, and I think the regulatory environment is continuing to change and evolve all the time. And I think one of the most important things is keeping abreast of either the changes that have happened, are happening, or about to happen, to make sure that businesses understand the impact for them and how they continue to serve customers, deliver the best outcomes in the most efficient way. And I think if you look at recently the adherence to Consumer Duty, which came into force last year, that continues to expand. It demands that brokers ensure fair value, transparency, good outcomes for customers, proactive identification of vulnerable customers, and clear communication around data. And I think that leads into, more recently, if you look at the kind of the UK's evolving post-Brexit data framework and the introduction of the data reform bill, brokers, got to understand new obligations around tech, around data, algorithmic decision making, especially when using AI or third-party platforms. So, yeah, I think, look, it's a landscape that continues to evolve, and whatever happens, you've got to stay relevant and abreast of what's going on.
Yeah, constantly evolving. But I think Michael probably touched on the big one there, didn't he, Lynn? Consumer duty.
Oh, absolutely. I agree with my colleagues here about the lots and lots of choice on compliance, but it's not a choice, is it? All of it has to be complied with. But I think consumer duty stands out as the biggest at the moment. That need to really understand your clients and understand where they sit on that continuum of consumer duty. Michael mentioned about identifying vulnerable clients. This is absolutely key as an industry that, we need to have it front and center. Duty to consumers is absolutely critical. And I think that's the one that, if you're really going to focus on something, focus on that.
Another key focus area, of course, of recent years has been technology. And indeed, while brokers will obviously always value the human touch, would you suggest there are any areas of technology that could be used to make the businesses more efficient? Any tips there, Michael?
Yeah, look, and I think I certainly think about this in a number of ways, because we talk about technology all the time. There's probably data, technology, and AI. So for data, how are you honing all of the information that you've got in the most efficient way, using the technology to then mine, hone, and understand that data, and then AI either to help with that process or whether that's decision support. And from our perspective, certainly, we're using AI and technology and data to ultimately either reduce and minimize some of the back office type functions and tasks, or provide more decision support to the underwriters. But in all of that, the underwriter and human touch is still integral to the process, and why we're equally investing as much as we can in the upskilling of the technical skills and capabilities of our underwriters to be able to use all of that functionality to deliver better outcomes for customers.
And Michael mentioned, of course, that scary word AI there, Lynn. A lot of people are afraid of it, but it is being widely used now. Are you using it?
Yes, quite extensively, actually. WTW are very much invested in the AI space, and we're working with our network members to help them use it in the most efficient manner possible. What we see AI as doing is not taking people's jobs or making decisions, but in doing the routine back office work that could take hours and hours for a broker. So if AI can be used to do the routine work, the stuff that, you don't need a lot of technical knowledge to do, but needs to be done, then that frees up brokers to spend more time talking to their clients, understanding their clients, and delivering value to their clients. And I'll use an example in my own work recently. One of our members sent me some data for analysis, 19 separate spreadsheets, which would have taken me an age to put all together on Excel. Copilot did it in 20 minutes. So, and it did it effectively. I did check. I made sure that it was, absolutely accurate. So things like that, I think, will save brokers an awful lot of time and free them up to get out there and talk to their clients, which is what you need to do in this marketplace.
Yeah, excellent example there. And Graham, are you seeing any areas where perhaps there is opportunities to achieve similar efficiencies?
Yeah, I think for me it's easy with all the advent of so much technology to become a bit tech-led on this stuff, when fundamentally it's around the capabilities you're trying to build. So whether that's digitalization and trying to remove non-value added activity, whether that's augmentation, so decision support for underwriters or for claims handlers to try and improve the decisions we make and service our customers better, and then right to the other end of the spectrum, which is generative AI, which is developing new content, which has, as Lynn suggested, a massive application, but also some associated risks around data security and governance. There's a massive opportunity, and I think it keeps on coming back down to what you're trying to achieve. So if you put a lot of store in providing and getting to know your customers really well, digitizing each of those interactions is going to have really limited impacts to your business. Whereas maybe providing self-service opportunities and enabling more value-add interactions would be a really good way to go. So I think it's really important to be solutions-oriented rather than tech-led.
I think this has been a really informative conversation. I just have one final question to throw at you all. Do you have any other tips, a wide open question, this one, for retail brokers operating in the mid-market space? Let's get a tip from each of you. Lynn, I'll start with you.
I've been around the market for a fair while now, and I've seen various cycles of hard and soft markets. And going right back to the beginning when we talked about the soft market, the biggest tip I can give brokers at the moment is that you have to behave differently during a soft market. You have to market differently. You have to be out sooner. You have to be talking to your underwriters, making sure you're getting the best quotes, maybe an exclusive quote, because my saying after all these years in insurance is like, I love a hard market. Any idiot can get a good quote in a soft market. It takes a real broker in a hard market. We're in a soft market right now. There will be a lot of people out there getting cheap quotes on your clients. So make sure you're ahead of them.
Right, excellent advice. I like that one a lot. Graham, let's get a tip from you.
Yeah, for me, it'd be to bring insurance in to that equation. So insurers too value long-standing relationships as well, and can add value to your client's business. We have a huge amount of data, a huge amount of solutions that we offer to clients. So please, to Lynn's point, bring insurers and specifically Allianz into that equation.
All right, two great ones so far. Let's go 3 for 3, shall we, Michael?
Outrageous finish from Graham there. And look, I think a couple of points we mentioned. I think relationships remain key. It helps us understand our respective businesses and builds trust. I think the speed and quality of the exchange of information is also key. That'll certainly, from broker to insurer, get the fastest and best response from us. And I think the last thing for me, I would say, is the honesty and transparency in the conversation. Not so much about things like the market exercise, but more broadly, how we're working together, what's going well, what can we improve, and more importantly, what more can or should we do to support you, your business, and your clients.
Excellent thoughts across the board, and a brilliant panel indeed. Huge thanks to everyone for their time today, and thanks, of course, to you for watching. We'll see you next time right here on Insurance Business TV.